Are you ready to crack the code on how to retire rich? Most people are stuck chasing the wrong dreams, hustling paycheck to paycheck, while the real wealth builders are playing an entirely different game. And guess what? I'm about to let you in on their secrets. If you've ever wondered how billionaires think, invest, and build empires, you're in the right place. In this video, we're diving deep into the strategies that could make you financially independent by 2032. Whether it's leveraging the insane potential of crypto, riding Tesla's AI-driven wave, or navigating today's economic chaos, I've got you covered. It's not just about making money. It's about creating a plan so airtight you'll look back a decade from now and thank yourself for watching this. So, if you're serious about flipping the script on your financial future, hit that like button, smash subscribe, and turn on notifications, because this is where your journey to wealth begins. Here's the thing. Billionaires don't just get lucky. They're wired differently. These are the people who see challenges as puzzles waiting to be solved, not roadblocks. Their mindset is built on relentless work ethic and an unshakable belief in their own ability to succeed, even when the odds look impossible. Picture someone like Elon Musk. Did he stop at electric cars? Nope, he's eyeing Mars next. What's fascinating is their laser focus on long-term goals. They're not the ones chasing shiny objects or falling for get-rich-quick schemes. Instead, they double down on high-impact strategies and make the impossible their starting line. Think about it. When everyone thought cryptocurrency was a scam, forward thinkers like Michael Saylor treated Bitcoin like gold 2.0, paving the way for massive wealth creation. But let's not sugarcoat it. Billionaires also embrace failure like a badge of honor. They know setbacks are just part of the journey to success. They analyze, adapt, and move forward. Want to think like them? Start asking yourself, how can I solve this? Instead of why me? That shift alone can open doors you didn't even know existed. And speaking of opening doors, let's dive into the staggering wealth stats that might just blow your mind. Did you know the number of billionaires has doubled in just the last decade? That's right. This elite club is growing, but it's still exclusive. Your odds of joining? About 1 in 457,000. Sounds daunting? Sure, but 90% of these billionaires are self-made, proving it's not about where you start, but how you play the game. The global distribution of billionaires is pretty eye-opening too. Hong Kong leads the pack with 8.8 billionaires per million people, while the US trails with 2.2 per million. What's the takeaway? It's not just about individual effort. The environment plays a huge role. Positioning yourself in growth-driven markets like the US or even adopting global investment strategies can be a game changer. Now, here's something to chew on. Wealth is being created at a mind-boggling pace, but most of it isn't from salaries or safe investments. The S&P 500 grew 75 times, while wages fell by 90% since 1971. That's a brutal reality check for anyone relying on income alone. So what's the solution? Stick around because we're about to explore the investment strategies that are flipping the script. When it comes to building wealth, it's not about spreading yourself thin. It's about going all in on what works. Let's say you are a billionaire, knows the tech, and invested nearly $1 million in Tesla shares back in 2019. In less than 3 years, you have turned into a $25 million fortune. That's the power of high-conviction trades. It's about recognizing the opportunity before everyone else and backing it up with bold, calculated action. The truth is, most people miss out because they're chasing safety. But here's the thing. Real growth happens when you take risks that are grounded in research and strategy. Case in point, the S&P 500 grew 75 times since 1971, yet wages have stagnated or dropped in real terms. If you're not investing, you're losing ground, plain and simple. The key? Balancing risk and reward like a seasoned investor. So, how do you start thinking like a sniper instead of a scattergun? Focus on fewer but impactful investments. Whether it's Bitcoin, Tesla, or other high-growth assets, the idea is to commit with confidence. And don't worry, we're diving deeper into why some assets outperform others and how to avoid common pitfalls next. This is where things get really interesting. First, let's clear up a common myth. Not all assets are created equal. Sure, gold and diamonds have been the poster children of wealth for decades, but times are changing. Bitcoin has emerged as the digital gold of the 21st century, thanks to its scarcity and explosive growth potential. Want to join the elite top 0.1% of Bitcoin holders? You'd need at least 21 Bitcoins, over $2 million worth today. Let that sink in. But here's the catch. Overconfidence in any single asset can be a recipe for disaster. Just because something worked in the past doesn't mean it's future-proof. Think of diamonds. Once perceived as a timeless investment, their value has been crumbling under market shifts. The lesson? Stay informed, stay adaptable, and always keep your eye on emerging trends like crypto. This is why strategic diversification matters. Bitcoin may be the star of the show, but pairing it with assets like Tesla shares and Ethereum can balance your portfolio. It's not about chasing every shiny object, it's about making calculated moves that align with your goals. And speaking of goals, let's talk about how to actually plan for financial independence. Ready? Let's go. Achieving financial independence isn't just a dream, it's a calculated process. It starts with defining your goals and working backward. For instance, if you want to be a millionaire by 2032, you'll need 1 Bitcoin, 125 Tesla shares, or 152 Solana coins. These aren't random numbers. They're realistic targets based on projected growth, and they're your roadmap to freedom. Here's the deal. Your burn rate, aka how much you spend, is just as important as your investments. The lower your expenses, the faster you can hit those milestones. Picture it. Trimming unnecessary costs today could mean reaching financial independence years earlier. It's not about deprivation. It's about being intentional with every dollar so it works for your future. And let's not forget diversification. While high-conviction trades are essential, having a mix of assets can cushion the blow if one sector underperforms. Whether it's crypto, stocks, or even alternative investments, the key is to build a portfolio that aligns with your goals. Speaking of alignment, let's tackle the harsh realities of today's economic challenges, because knowing the terrain is half the battle. Here's the harsh truth. Wages have been losing ground for decades. Since 1971, real wages have dropped by 90%. If you're relying solely on your income to build wealth, you're fighting an uphill battle. Inflation and rising debt are eating away at purchasing power, making it more critical than ever to invest wisely. Governments aren't helping either. With many developed countries like France and Norway spending over 50% of GDP, we're seeing higher taxes and sluggish growth. The economic outlook for fiat currency holders is bleak, to say the least. This isn't fear-mongering, it's a call to action. Without strategic planning, the odds are stacked against you. But there's a silver lining. Those who invest strategically can outpace these challenges. By leveraging assets like Bitcoin and Tesla, you can hedge against inflation and tap into markets with exponential growth potential. And if that sounds daunting, don't worry. We're about to break down how different regions of the world play a massive role in shaping your financial future. Did you know that in 2009, the US and EU economies were roughly the same size? Fast forward to today, and the US economy is now 50% larger. That's not just a statistic, it's a wake-up call. Positioning yourself in markets that foster growth and innovation can mean the difference between stagnation and exponential wealth. Here's why this matters. Europe's heavy government spending and high taxes have slowed economic growth, making it harder for individuals to get ahead. Meanwhile, the US has become a hotbed for innovation in sectors like AI, tech, and crypto. Simply put, where you invest and operate matters just as much as what you invest in. But don't limit yourself to local opportunities. The beauty of today's global economy is that you can leverage international markets. Platforms like Binance or Coinbase make it easy to diversify your investments beyond borders. Speaking of managing your resources wisely, let's dig into the importance of debt management and why it's the first step toward building real wealth. So let's be real, debt can either be a tool or a trap. If you're juggling high-interest credit card balances, that's money working against you, not for you. The first step to building wealth? Eliminate those financial leeches. Paying off a 20% interest rate credit card is like earning a guaranteed 20% return. It's a no-brainer. Not all debt is bad. Strategic borrowing, like using low-interest loans to invest in high-growth assets, can amplify your returns. But, and this is critical, Never borrow to speculate. Risking money you don't have is a fast track to financial ruin, especially in volatile markets like crypto. Once you've handled high-interest debt, you're free to redirect those payments toward investments that grow your net worth. Imagine paying off a credit card today and using that extra cash to buy into Bitcoin or Tesla. That's the kind of move that can change your financial future. Speaking of smart strategies, let's talk about tactical approaches that blend patience, precision, and long-term vision. Here's a winning strategy. Think long-term, but act with precision. The combination of hodling and strategic trading is how many investors maximize their returns. For instance, holding Bitcoin through market cycles can yield massive gains, while trading smaller altcoins during price swings can amplify profits. It's all about knowing when to hold and when to pivot. Diversification plays a massive role here, but not in the traditional sense. Instead of spreading yourself thin across 50 assets, focus on 4 to 10 high-conviction investments. Think Bitcoin, Tesla, Ethereum, and Solana. This way, you're maximizing exposure to growth while still managing risk. Remember, it's about quality over quantity. And here's a pro tip. Track your portfolio's performance using tools like TradingView and DeBank to make data-driven decisions. It's not just about watching the charts, it's about refining your approach with each move. From mastering the billionaire mindset to planning your financial freedom with precision, you now have the tools to take control of your future. Knowledge alone isn't enough. Action is what separates dreamers from doers. So what's your next move? Here's a thought. Start small, but start now. Open your TradingView account. You'll find my referral link pinned in the comments of this video. It gets you $15 off any plan. Track your favorite assets and build a plan that aligns with your goals. And while you're at it, don't forget to grab my ebook on mastering DeFi. It's packed with strategies, tools, and insider tips that you won't find anywhere else. Support the channel for more quality daily content. The link's also pinned in the comments. It's the ultimate guide to building financial independence through crypto. So, what are you waiting for? Drop a comment below and let me know your biggest takeaway from today's video. Don't forget to like, subscribe, and turn on notifications. Trust me, the content coming your way is going to change the way you think about money, investing, and freedom. This is Crypto Yield Pro, not a financial advisor, but helping you with insights to retire rich. One strategy at a time. See you tomorrow.